allocation theory, again, we're allocating assets. The example I showed you was kind of a classic real estate, commodities, S&P 500, and internationals. What wasn't in that equation? There was no cash and there were no bonds. And what's happened in these last year is literally all assets fell but what? Treasuries or cash. And in fact, the government sold a lot of debt and didn't have to pay much money for that debt because that's the only thing people wanted to buy. The only thing that people were optimistic about last fall and early spring was U.S. Treasuries. Otherwise, our deficit would be even larger. And everything else we were pessimistic about. Now, so those funds that had no bonds, essentially no cash investments, took a large hit. Remember, the S&P was down 38%. Other asset classes were down more. Some asset classes were down less. So you saw big corrections. The theory in asset allocation is you won't see that kind of correction. But I think what was really true is they missed one of my rules for volatility. They misdiagnosed the need to understand the cash flow. And what was really true is I hadn't taken into consideration that I'm going to need cash out of these portfolios. So what you're seeing is it doesn't matter whether you're talking about a nonprofit funding their activities. You're seeing nonprofits now that are saying they're having to cut back and do different things very differently. Or an individual who's retired. If you're living off of your investments, you have to understand your cash flow needs to invest appropriately. It's not just about return, and it's not just about the risk. It's about the cash flows with the return and risk. So the reason people said it was dead is because the portfolios went down. But I would say the reason that even more so was that they didn't understand the cash flow. And in truth, those portfolios have recovered substantially, and I think they'll do fine. But that next time, they will think more about the cash flow. Every opportunity is a learning one. So, good question. Rebecca?
On that assets, where do exchange-traded funds and mutual funds come in?
Exchange-traded funds and mutual funds can be any asset class. So you might have an exchange-traded fund that's a real estate fund. You could have an exchange-traded commodity fund. You could have a mutual fund that's just real estate or a mutual fund that's just... So an exchange-traded fund or a mutual fund can be a fund in any class. And they can actually mix classes, which makes it confusing. So really you have to look... A mutual fund is really just a assimilation of a variety of things. So rather than buying one stock, you might be buying the management of a pool of stocks.
Does that dilute your risk some?
It does divert your risk some.
Is there some sort of ratio? How much does it dilute your risk?
Well, what I would say it a little bit differently. I would say that I'd go back one more step. The alternative to using something like mutual funds and ETFs is you're using some sort of individual securities. So as an investor, that means you're buying Microsoft or General Electric, or you're buying an individual security. And if you buy enough of those, you can be diversified. But it's also, our basic philosophy is you need to own internationals, you need to own commodities, you need to own real estate. So when you get down to owning these specific pieces, you almost get into too many decisions. It's really, and remember that asset allocation is 90% of your return. So most of the returns being generated by the asset class itself. And so if you have to have essentially very many, larger millions than most people have. So if you have even a $3 or $4 million portfolio, by the time you take that matrix and you divide the stock piece out from the investment piece, and you take the stock piece and you divide the commodities from, you've got a smaller piece, and it doesn't make sense to have individual asset classes inside of that, or individual securities inside of that, I should say. It probably makes more sense to have one or two funds, just because the size of the money, you're only making say a $200,000 purchase here. You're not making a $2 million purchase here because this is 10%. It also makes it a whole lot easier to rebalance. Peter?
Are you increasing the international component of your asset allocation?
We have been increasing our international component. We haven't done it today, but we have it broadly. We have it in bonds and equities and real estate. So we have international components in all three. We were already pretty aggressive, so we haven't gone the next step, but I'm sure we will. We have emerging markets. And in our international components, we have emerging markets, large cap, and small cap internationals as well. I'll take one more question, and then I'm going to close. But I will be here, and Andy Pulsford is also here from our office. Andy can answer any question better than I can. So you're welcome to talk to either one of us afterwards. Who has one more question? Yes?
Do you like 529 plans?
Do I like 529 plans? Yes and no. Yes. A 529 plan is a savings vehicle for college. I like some of the features of a 529 plan in terms of a tax efficiency, but because they're run by the state, I don't always like the investment options. So we tend to hedge our bets and do some of both. Because sometimes the performance, in a 529 plan, the way they're, Congress decided to put them together, they have to be sponsored by a state. So the state makes a decision of who is going to run the 529 plan in that state. So when you get down to looking at them, you don't have a lot of choices sometimes within the 529 plan for how you're going to invest. So you got some tax efficiency there, but you don't have so much in terms of investment choices. So sometimes we do a little both. We do some in the 529 plan and some elsewhere because we don't like the investment choices. So that's the biggest thing I see about it, 529 plans that I don't like. So thank you for being here. I'll stay for questions, and it's been our pleasure. And please fill out your comment cards, and we have a gift for you. And don't forget, Andy's going to pass those around. Thank you.